in my session, we talked about banking union on the one hand. So what is banking union? It's the idea that the European Union should centralize the regulation of banks, but it should also centralize the source of funds for needs that these banks can have. So for example, when disaster happens, it should be decided in a central level. It should be central funds to resolve issues. So we all agreed, I guess, that the banking union is necessary. I gave a couple of points why it's very hard to do. And one point is that Europeans just don't like banks. So since there's not much trust, but they also do not understand how banks work, how necessary they are for the system, etc. So there is a possible explanation that then the source of all this is the lack of financial education. Basically, there's a lot of financial illiteracy in Europe. I mean, not only in Europe, but it's a big issue here. And so what we need to do is try to improve the level of financial literacy through possibly two ways. So either we can educate people directly in schools, or we can also try to aid them at the time that they make financial decisions. For example, when you go to get a loan, the state can actually give, for example, a tool where you can do some calculations. You can, for example, say what your income will be in the next years, and then it will let you know whether this mortgage makes sense for you or not. Okay, and why do I think this is necessary? Again, because the source of many issues for the banks is that people made bad decisions for themselves. Okay, so people could argue that banks were giving bad loans, that we're not doing enough research, but it's also in the hands of the client to actually make good decisions for themselves. And I think many people have not made smart decisions. The topic that I mostly talk about in my session is financial literacy. It's an issue that people are not very trained in how to take choices regarding their own personal finances. So for example, when they go to take a loan, they don't know how to make the necessary calculations. And the problem is that it turns out that they make bad decisions for themselves, so they take a loan that they shouldn't be taking. So they buy maybe a house they couldn't afford. But it's also very bad for the system and the countries where they belong to, because when they take a bad loan and too many people take a bad loan, then it can be that the bank has problems, and when banks have problems, then the whole economy of a modern country has problems. Okay? So that was the one part. The second part is actually financial illiteracy also makes reform hard. That's more sort of a subtle point. So right now in Europe we need the so-called banking union. So we need that banks will be centrally regulated, and also there will be central funds to resolve issues that will come up with these banks. And this is meeting a lot of political resistance. So basically citizens of Europe are not ready to accept this. And I think one reason they're not ready to accept it is because they do not understand how the system works, they don't understand how necessary banks are, and they do not understand that the optimal way to regulate and coordinate them will be at the European level, so at the high level.